Hello there, I'm Rachel. Welcome to the Economic Corner, where we update you on all the biggest global economic announcements. First up on the Economic Corner is the monetary policy announcement from New Zealand. It's in line with expectations. The Reserve Bank of New Zealand decided to keep the current monetary support with the official cash rate unchanged at 0.25%. Even the large-scale asset purchase and funding for lending remains the same. The Monetary Policy Committee said that even though the global economic outlook was looking for support from the New Zealand government through its fiscal and monetary policies, the economic recovery was uncertain and uneven. It says that while the construction industry was strong, unemployment numbers are also better than other countries. It further said that as fiscal stimulus continued, sectors like travel and tourism are still weak. Huge revenue losses suffered by this industry has been partially offset by the opening of the Trans-Tasman bubble, but still not up to expected levels. Commenting on the inflation numbers, Monetary Policy Committee said that the rising prices for businesses and consumers were due to disruptions in the supply chain, higher oil prices and disrupted shipping arrangements. The higher prices are temporary and likely to cool down over the year. According to the MPC, the bank's medium-term outlook remains the same as the February one. It expects the medium-term inflation and employment to be below targets. Regarding the housing crisis, the MCP agrees that the low interest rate regime has led to an increase in house prices. But the current policies to balance demand and supply announced by the government are likely to show results soon. The RBNZ committee says that it would maintain low interest rates till the consumer price, inflation and employment remained at the target level for some time. Very clearly, the MPC stated that those conditions would continue until the targets for inflation and employment were sustained at the remit levels. In view of the rising inflation numbers, economists had been worrying that this might lead to a hawkish monetary stance. The expectations were that with all cues pointing towards an economic recovery and the demand rising, the RBNZ might lift the official cash rate. Moving on now to some important economic data announcements. The monthly trade balance of New Zealand was a surplus of $388 million in April. That was reported by Stats New Zealand on overseas merchandise trade, while goods exports increased 1.2% to $5.4 billion. Goods imports surged 26% to $5 billion in the month of April as compared to the same month in 2021. Vehicles and crude oil drove a substantial increase in overall goods imports in April. The value of goods imports rose 26% in April to $5 billion last month. Crude oil increased by $207 million. International Trade Manager Alistair Allen stated that the surge in import values differed with a drop of comparable size in import values in April 2020. New Zealand witnessed COVID-19 level 4 lockdown in April 2020, with non-essential enterprises closing and restrictions imposed on local and international travel. All of New Zealand's major trading partners increased their imports. The European Union saw the highest increase of 41%, with increases in cars, trucks, mechanical machinery and equipment. Exports to trading partners saw some contrasting movements. The surge in export numbers was driven by a $287 million rise in the value of untreated logs, to a level nearly 4 times greater than the value in April 2020. However, the increases were partially offset by big drops in dairy products and fruits. Now it's time for a very short break, but stay tuned. I'll be back with the latest updates from the US, Germany, Japan and Costa Rica.
At 𝐊𝐴N TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, Our experts will share their timely inputs. So join us on this exciting journey of live streaming financial and stock market news. 𝐊𝐴𝐚 TV.
Hello, I'm Rachel. Welcome to the Economic Corner. The Bank of Japan released the Producer Price Index numbers. The Services Producer Price Index for all items rose 1% from the previous year. The Services Producer Price Index for all items, excluding international transportation, rose 0.9% from the previous year. Let's now have a look at some economic numbers from the US. Their new home sales softened in April with growing housing affordability concerns. Rising building material costs and low inventory have caused new home sales to jump 20% of their price on year, harming housing affordability and driving down the pace of new home sales. Sales of newly built single-family homes fell 5.9%. following a significant downward revision of the March estimate to an 863,000 seasonally adjusted annual rate. That's according to newly released data by the US Department of Housing and Urban Development and the US Census Bureau. US house prices rose 12.6% from the first quarter of 2020 to the first quarter of 2021. That's according to the Federal Housing Finance Agency House Price Index. House prices were up 3.5% compared to the fourth quarter of 2020. The seasonally adjusted monthly index for March was up 1.4% from February. Meanwhile, US consumer confidence held steady in May, following a gain in April. The index now stands at 117.2, down marginally from 117.5 in April. The Present Situation Index, based on consumers' assessment of current business and labour market conditions, increased from 131 to 9 to 144.3. However, the Expectations Index, based on consumers' short-term outlook for income, business and labour market conditions, fell to 99.1 in May, down from 107.9 last month. On the other hand, Fifth District manufacturing activity strengthened in May, according to the most recent survey from the Richmond Fed. The composite index inched up from 17 in April to 18 in May as all three component indexes, that's shipments, new orders and employment, reflected growth. A majority of firms reported lengthening vendor lead times as this index reached a record high along with the backlog of orders index. Meanwhile, the index for raw material inventories reached a record low. Overall, manufacturers report improved business conditions. Survey results indicated that many firms increased employment and wages in May. However, they struggle to find workers with the necessary skills as this index dropped to its lowest value on record. Survey respondents expected workers to remain difficult to find and employment and wages to increase further to the next 6 months. Now it's time for a break, but stay tuned. I'll be back with some more of the latest updates from the US, Germany and Costa Rica.
At 𝐊𝐴𝐚 TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts. Our experts will share their timely inputs. So join us on this exciting journey of live streaming financial and stock market news. 𝐊𝐴𝐚 TV.
Hi, I'm Rachel. Welcome to the Economic Corner. Lastly, here are Germany's GDP numbers. The gross domestic product fell by 1.8% in the first quarter of 2021 on the fourth quarter of 2020 after adjustment for price, seasonal and calendar variations. After the German economy had somewhat recovered in the second half of 2020, the coronavirus crisis caused another decline in economic performance at the beginning of the year. The Federal Statistical Office reports that the decrease was slightly larger than reported in the first release of the 30th of April 2021, compared with the fourth quarter of 2019, the quarter before the coronavirus began. GDP was 5% lower. Moving on to some of the latest developments on the vaccine front and pandemic recovery phase. Half of US adults have now been fully vaccinated against COVID-19 with the first 6 months of the country's vaccine rollout. More than 129 million Americans aged 18 and over are at least 2 weeks past their final vaccine dose, classifying them as fully vaccinated. That's according to data from the US Centers for Disease Control and Prevention. President Joe Biden is aiming for 70% of American adults to have received at least one jab by the 4th of July. Meanwhile, Moderna will join the effort to vaccinate children against COVID-19 after a phase 3 trial showed its vaccine is safe and effective in under 18s. The company says that the vaccine showed 100% efficacy 14 days after the second shot in a phase 3 clinical trial of 3,732 adolescents aged 12 to 17. The children were given 100 milligram doses, the same dose as the vaccine administered to adults, and experienced no significant safety issues. The drug maker plans to submit its data and request authorization for the use of its mRNA vaccine from the US Food and Drug Administration and other regulators in early June. Moderna has become the second pharmaceutical company to seek authorization for use of its COVID-19 vaccine in children after the US began to use the BioNTech Pfizer jab this month. In the midst of the COVID-19 pandemic, Costa Rica has now become the 38th member of the Organization for Economic Cooperation and Development, accumulating an 11-year quest to join the club of developed nations. Costa Rica joins Chile, Colombia and Mexico as OECD members from Latin America. Argentina, Brazil and Peru are still being considered as prospective members. That's all from the Economic Corner for today. Stay tuned for more latest news and market updates. I'll be back with the Market Close report later today.